If you've ever entered a trade and immediately watched price go the opposite direction, you're not alone. The truth is, most traders don't struggle with finding setups, they struggle with timing their entries and exits. So let's talk about some of the best technical indicators that can actually help you spot cleaner entries and smarter exits without overcomplicating your charts. First up, moving averages. Simple but powerful. A lot of traders use the 50 EMA and 200 EMA to identify trend direction. If price is above both, you're generally looking for buys. If it's below, you're looking for sells. But here's where it gets interesting. Entries become much cleaner when you wait for price to pull back to the moving average instead of chasing the move. That pullback is where high probability entries usually happen. Next is RSI, or the Relative Strength Index. Most people use it wrong by just looking for overbought and oversold levels. But RSI is way more useful when you combine it with trend. In an uptrend, you want RSI to dip and then bounce. That's your signal that momentum is continuing. Same thing in a downtrend, you wait for RSI to rise and then turn back down. Then you got MACD. This one is great for confirming momentum shifts. When the MACD line crosses over the signal line, it can hint that momentum is changing, but instead of using it alone, it works best as confirmation. If you already have a trend and structure, MACD just adds that extra confidence before you enter. Now, here's where most traders get stuck. They overload their charts with too many indicators, and everything starts giving mixed signals. That's why tools that combine multiple confirmations into one view can be a game changer. For example, some traders prefer using something like the Apex Trend Indicator because it simplifies this whole process. Instead of juggling multiple indicators, it already factors in trend direction and gives you clear entry and exit signals on the chart. It even shows take profit and stop loss levels, which removes a lot of the guesswork. According to the official documentation, it can automatically detect trends and provide structured trade setups with defined risk levels, which is exactly what most traders struggle with. But regardless of what you use, the real edge comes from combining three things: trend, confirmation, and patience. You identify the trend, wait for confirmation from indicators like RSI or MACD, and then you enter on a pullback instead of chasing price. And when it comes to exits, don't just rely on feelings. Use structure, previous highs and lows, or predefined take-profit levels. That's how you stay consistent. At the end of the day, indicators are just tools. They don't make you profitable on their own. But when you use them correctly, they can give you clarity, confidence, and a much better shot at catching high-quality trades.